Bitcoin has had a rough couple of years. It reached its all-time high price of $69,000 in 2021, and it's been downhill ever since. In 2022, Bitcoin's price dropped nearly 77%, falling below $16,000, and while 2023 has been much better, it's still a far cry from the insane highs of the 2021 bull market. But that might be about to change. Will 2024 finally be the big year Bitcoin needs? There are two major reasons why many others and I believe 2024 could be a huge year for Bitcoin: the approval of a Bitcoin ETF and the Bitcoin halving. Alone, each of these events would be a big deal. Together, they could very well cause Bitcoin to have its biggest year ever. It also seems likely that both of these events will happen in the first half of the year, which will give markets plenty of time to react. Let's look at both of these events and see how exactly they could lead to a massive year for Bitcoin, and we will also look at a secret third factor that could play a huge role in Bitcoin's 2024 rise. First, we will take a look at the possible approval of a Bitcoin ETF. An ETF, which stands for Exchange Traded Fund, is a type of publicly traded investment that tracks the performance of another asset or index. So a Bitcoin ETF is an ETF that tracks the price of Bitcoin. A Bitcoin ETF works by having the firm that owns the fund control the Bitcoin, while investors just trade the ETF like they would any other stock. There are actually several types of Bitcoin ETFs. The one that everyone is so excited about is a spot Bitcoin ETF. This type of ETF tracks Bitcoin directly and is backed by the actual asset. The other type of Bitcoin ETF that is already listed on the stock exchange is the Bitcoin Futures ETF. The big difference here is that there is no Bitcoin directly backing the Futures ETF. Instead, it is backed by Bitcoin Futures contracts. While this does allow individuals to get some exposure to Bitcoin on the stock market, it is very different from being able to directly purchase Bitcoin. Many investors don't want the extra risk associated with futures contracts and would much rather be able to invest in Bitcoin directly. If you are already into Bitcoin, then you might be wondering, why does this matter? Anyone can go and purchase Bitcoin right now through an exchange. So why does having it on the stock market make any difference? There are several reasons why it's such a big deal. Firstly, a Bitcoin ETF will make Bitcoin more accessible to those who aren't already familiar with it. There are likely many investors who may be interested in Bitcoin, but just haven't made that final leap into investing in it. Maybe they don't want to put their money on a crypto exchange that they aren't familiar with. While many crypto exchanges such as Binance and Coinbase are considered relatively safe, it's understandable that many investors are hesitant to deposit significant amounts of money on these platforms, particularly after the events involving FTX in 2022. Having Bitcoin directly on the stock market means investors can easily and comfortably move their money into Bitcoin while staying entirely on a platform that they are already familiar with. The approval of a Bitcoin ETF would also add legitimacy to it as an investment. Many traditional investors are nervous about putting their money directly into a new type of asset like Bitcoin. They may be interested in it, but traditional finance has helped them grow their wealth, and they may not want to risk their money on a new alternative. If a Bitcoin ETF is approved, that will be a huge thumbs up from traditional finance. This approval will likely make many investors feel more secure about potentially allocating small amounts of their wealth toward Bitcoin. It also helps that the ETFs currently awaiting approval are from well-known firms that many traditional investors are familiar with, BlackRock being the most notable. A Bitcoin ETF would also allow many financial advisors to start offering Bitcoin to their clients. This would increase the ease and legitimacy of investing in Bitcoin even further. The most notable effect that the Bitcoin ETF will have is on Bitcoin's price. If Bitcoin has more money flowing into it, then it seems obvious that the price will climb. A lot of people have been comparing the Bitcoin ETF approval to that of the first US gold ETF, which was approved in 2004. From 2004 through 2011, the price of gold increased by roughly 350%. A 350% increase on a more mature and stable asset like gold is very substantial. If gold can increase by that much, then could a more volatile asset like Bitcoin increase by much more? Galaxy Digital recently released a report that uses this comparison to gold ETFs as a baseline for determining how a Bitcoin ETF could affect its price. They predicted that in the first year alone, the price of Bitcoin would increase by 74%. Galaxy Digital believes that a Bitcoin ETF will dramatically open up the market of investors, which would result in $14.4 billion in inflows in the first year alone. That would in turn result in the mentioned price increase. The other major event is the Bitcoin halving, and unlike the Bitcoin ETF, this is a mechanism built directly into the Bitcoin network. The Bitcoin halving is an event where the total number of new Bitcoins created every block is halved. This event happens every 210,000 blocks, which is roughly every 4 years. The goal of the halving is is to ensure that Bitcoin becomes a scarcer asset over time. When creating the Bitcoin network, Satoshi Nakamoto wanted the total number of Bitcoins to be limited, unlike traditional currencies such as the US dollar, where an infinite amount could be created. To make this process decentralized, Satoshi came up with the halving schedule. At its inception, Bitcoin would start with a block reward of 50 Bitcoins. Then, every 4 years, that number would be cut in half. By the year 2140, the final Bitcoin halving will occur, dropping the block reward from 0.00000001 all the way down to 0, ending the creation of new Bitcoin and locking its total supply at 21 million Bitcoin forever. Each Bitcoin halving is important because it directly affects how much Bitcoin miners get paid. Bitcoin miners secure the network, and right now, their largest source of income are those newly created Bitcoin. When that number gets halved, it can really affect their business. When a halving occurs, it doesn't mean that the price of Bitcoin will immediately shoot up as a response. Usually the months leading up to the halving see the price of Bitcoin rise in anticipation of it, but we rarely ever see it get back to its previous all-time highs before the halving. Then in the months following the halving, the price continues to climb until eventually it hits those new all-time highs. Halving is an essential part of the Bitcoin cycle, marking the beginning of it, and every cycle up until now has led to Bitcoin hitting new all-time highs. The fact that the halving happened so early in the year means that there will be plenty of time for Bitcoin to reach those new all-time highs. The next halving, which will be the fourth, is expected to happen sometime in April 2024, exactly at block 840,000. Currently, each block rewards miners with 6.25 Bitcoins, but after the halving, that number will be down to 3.125. The fact that a Bitcoin ETF approval and the halving could occur months apart from each other is huge. It would mean that more people will be investing in Bitcoin at a time when new Bitcoins are much scarcer. However, the third factor could be the icing on the cake. This third factor is the economy. In recent months, the economy has begun to get better and better. Inflation is coming down, peaking at 9.1% in June 2022, and dropping all the way down to 3.2% by October 2023. Wages have been outpacing inflation since May of 2023, and many people will likely be better off in 2024 than they were in the previous 2 years. The US economy has also proven to be very resilient, with the recent third quarter GDP numbers showing that the economy grew by over 5%. One of the major reasons that Bitcoin did so well in 2021 was because the economy had a remarkable recovery from the mess of a year that was 2020. For many reasons, your average American had more money to invest than normal. This led to them putting money in both Bitcoin and the stock market. Bitcoin reached its all-time high in November of that year, while the stock market followed in January of 2022. In the following 2 years, inflation was running rampant and many people didn't have much money to spend on things like they did in 2021. However, that is beginning to change. Going into 2024, we are starting to see many of the same things that led to the highs back in 2021. The S&P 500 is up over 20% for the year, and Bitcoin is up an astounding 150%. While the economy isn't back to what it was in 2021, if this trend continues, many Americans will likely feel much better about their economic position. The big factor is if these trends continue. As long as they do, we can almost guarantee that the state of the economy will have a dramatic positive effect on the price of Bitcoin. But if they don't, things might not go as well. Overall, 2024 has the potential to be Bitcoin's biggest year. With 2 major events and an economy that is getting better, it seems likely that Bitcoin will hit new all-time highs. We really couldn't ask for a better setup, and as long as there's no crazy black swan event, we could be in for a wild ride. Obviously, this is all just speculation, and things could turn out way different than any of us could ever expect. However, it definitely looks like Bitcoin is in for a big year.